You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again after a bit of a hiatus here for the live stuff, at least this week. Of course, we were off for the July 4th holiday. I hope all of our U.S. listeners and everyone around the globe had a great 4th of July. You don't have to celebrate America's independence if you're not here. You can celebrate whatever the heck you want. Markets were closed. You got to take a bit of a break. So you're welcome for our independence there. My name, of course, for those of you who might be new, I know a lot of you are tuning in all the time, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging these days. We have been traveling a lot this week, so I sound a little bit different. I'm coming at you from the mobile studio here, the southern studio here, even warmer than Chicago right now. We decided to trade the 4th in Chicago for the 4th down here in the southern studio. Seems like it was a good trade given all the shall we say, terrible goings-on back in the Chicagoland area over the course of the past week. Of course, you guys know where to go if you want to join us live for this show. Pretty much everything else we do here on the network. Also get exclusive pro Q&As. You got a double dose. You had the Rock Lobster last week, as well as none other than Mr. Don Schlesinger himself, a.k.a. the Short Vol God, and also Blackjack Hall of Famer. So check those out if you missed them last week. We'll be back later this week with options oddities here. So I think it's going to be me flying solo on oddities this week. I do believe the Rock Lobster still enjoying his lengthy sabbatical over there on the shores of Maine, but we'll have some good stuff to get to with you. Of course, we have to give away our June Pro Trading Crate soon as well. That's coming up here as well. I'm not sure if we have it set up here in the mobile studio to do today. If not, we will do so on Monday's Option Block show, or perhaps tomorrow on Vol Views. You have my word, listeners. We will give away. We will have our next winner for our great pro trading crates. Of course, if you guys want to play along with those, get access to the live, the exclusive shows, as well as get your name in the hat to win some cool stuff. And I got to admit, it is pretty cool. It's all mounted and piled up there in our storage area. We bring some of it up to the studio whenever we have room. So there's a mountain of it in the studio now as well. And I can see all the stuff you guys are getting. And it's all pretty cool. Every crate is a one-off. No two will be alike. So get your name in the hat, theoptionsinsider.com/pro. And I mentioned the Rock Lobster on sabbatical. I do believe the Greasy Meatball might be traveling as well. But that does mean if he has all of his I's dotted and T's crossed, then we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how you doing, sir? Can you hear me?
I can hear you. Can you hear me?
I can. All right. We have made a love connection here via Skype, I am pleased to say. All right. So all of the technology is working. Let us not spit in the eye of the Skype gods any further. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we break down what the heck is trading. What is the market giving to us here on this latter portion of this truncated holiday trading week? And so far, it's been a fair bit of green, not a ton. Getting a little bit more of that on the screen today. Most of the major indices now firmly trending into the green. NASDAQ leading the charge up about 2%. S&P up about 1.25%. And the Dow up about 0.8%. So all that green means our vol friends taking a bit of a well-deserved hiatus out there today. They're trending a little bit lower. VIX Cash, when we kicked off the show, was a little bit shy of the 26 handle, 25.90. To be precise, that puts it down almost 2 points, about 1.7 points from where it was. And again, not on Monday's show, but all the way back last Thursday, our last option block episode. VVIX at about an 85, so back below that magical, mythical triple-digit level. Down about 4.5 points again this week. VXX, again, this product, we really don't know what to make of this thing ever since Barclays seemingly kind of washed their hands of it. Now it's drifting around at about a 22, down a little over 0.75 of a point from where it was this time last week. UVXY down to about 1340. That's down 0.6 of a point from where it was this time last week. SVIX, so the inverse VIX product, obviously up a little bit, not much, up about 0.25 from where it was this time last week, trading right around an 11 handle when we kicked off the show. UVIX, so the 2X levered VIX, 1530 when we kicked off the show. That was down about almost 0.75 of a point from where it was this time last week. And VolQ, aka the at-the-money vol of the NASDAQ 100 at about a 31 exactly when we kicked off the show. That's down a little over 0.3 of a point from where we were this time last week. So overall, we're down, but not a ton from where we were this time last week. So we've done some living, but not a huge amount. Mr. Uncle Mike, sir, now that you're back from the holiday, hopefully you enjoyed your festivities, your barbecue, your hot dogs, anything else you had going on over there in the St. Charles land. What's been lighting up your tape throughout the rest of this week into today, sir?
Well, I think with what we have going on today, it's a traditional risk-on day again. And so what is good to see is that when stocks are up, bonds are down. We're having some selling in the 10-year note, and we are having a rally in the S&P 500. So it's nice to see, at least for now, bonds seem to be in a place where they want to be at this stage in time. That is at the higher interest rates that they have gotten so far over the first 6 months of this year. But over the course of the first 6 months, we've had stocks down and bonds down. But just recently, it seems like the last couple of weeks, we're starting to get that inverse relationship back again, which makes me think that we might be not necessarily done with the rate hikes by any means. That's a whole other topic. But at least in terms of where the bonds are priced, we might be settling at a floor, or this might be about the area where bonds are feeling comfortable. Of course, that can change at the drop of a hat, but that's one area with which we are. The U.S. dollar is stronger than, it just keeps getting stronger in general. When the U.S. dollar is strong, commodities tend to not do as well. And so we do have oil is definitely a ways off from where it was at an earlier point. Right now, oil, of course, I mean, it is up $5 on the day, but it's approaching the 104 mark. But compared to where it was, it is down quite a bit. So we have that. Silver is below 20, and it's kind of settling out there, it looks like. It's not really seeing a point of support and just bouncing off of it, just kind of settling there. So we do have that. And with everything that we have going on, it looks like just the strength of the dollar is the thing that's keeping commodities at a weaker level. And I'd be interested to see where we go with the stock market if we do get a weaker dollar, because right now, with the strength of the dollar, we're holding on to the lows that we made over the course of the last few weeks in the S&P 500. We've got as low as I believe we're in the 3600s. We're knocking on the door of 3900 again in the S&P. So we have that, and we have all that with a strong dollar. And so if we do get some selling of the dollar, then we might get some type of freaky rally like we did in 2020 towards the end of the year, where it just everything goes up again. And so this is a very volatile market, and it's a volatile market amongst a lot of other volatile markets. And oh yeah, by the way, Bitcoin still sucks. BitcoinReallySucks.com. And that's what I'm seeing right now.
Bitcoin. Have you redirected that to St. Charles Wealth yet, or is that still in the workings, sir?
I don't think I'm going to do it. I'm just keeping that as an investment for now. I think because at some point, someone's going to give me $1 million for that title. That's my plan. $20 is going to become $1 million.
That's the kid's college fund right there. BitcoinReallySucks.com. Well, you mentioned XLE. We're going to get into TWIFO a little bit later here on the network, but I'm curious. You mentioned oil, I should say. You're a big XLE proponent. What have you been up to over the last month or so in XLE? Or if anything, are you out of it completely now that it has been trending mostly down, sir?
Well, and just keep in mind, full disclosure, I don't have XLE for all of my clients, and XLE is just not something I really group trade that much, or I don't group trade it, or I group trade it very seldom just as kind of a general holding. For some clients, I'm doing some things. For other clients, I'm doing other things just based on different needs with XLE. But with it, for some clients, I just have it as a holding, and that it's a natural way with which to hedge rising gas prices. And for that, we're doing pretty well with it right now. For the most part, though, I'm not in it for the appreciation, although no one's going to complain about a higher price in something they own. But what we're in it for, a lot of ways, is for the dividend that it pays. And so if oil companies remain strong, you continue to have that dividend. There was another client I got out of. We just wanted to do some reshifting. He got a little bit XLE heavy. So probably, I believe it was in the higher 70s when I did it, but we got out of it. And I put him into some XLK, some technology, just as a rebalancing thing. And so my thought is that oil's not going to go up forever and technology is not going to go down forever. And that was my rationale. Another gentleman is getting a little bit too heavy in XLE. So I sold some calls with the hope, I don't know if the hope, but if we get called out on it, we get called out on it. So I've been doing that. So I've been working XLE, but now and then I have another client. I just thought of this, that just a conservative section of the portfolio. I sold some 6-month puts in the 50 level, or I'm sorry, I believe it was in the mid 50s, not in front of my screen right now, so I can't give you the exact numbers. Not that I could anyway, but I went 6 months out for this client, and we got roughly $2.50 for the 55 or the 56 puts. I forget what it was, honestly, so please don't quote me on that. But the concept is that we have a 5% investment over the course of 6 months, and XLE just has to stay above the mid 50s, and there it is. And if it does go to that level, I would be happy for that client to own it at those levels anyway. So XLE, there's a lot of things to do. The more I talk about, I've been doing a lot of things with XLE, just a lot of different objectives with different people, but using it in a lot of different ways.
Always good to get our XLE catch up here on the show. In fact, I have a lot of catching up to do here on the show. Let's start catching up how the volume numbers are looking, at least for right now. And usually a firm green day on the screen means VIX is not really doing a heck of a lot of paper. But that appears to be trending a little bit differently today because VIX closing in on 400,000 contracts already, 394,000 contracts. So a pretty robust day, especially when you consider the ADV is down around 30-odd thousand contracts from our last show last week. It's down to 468,000. So it does seem like VIX is on pace to eclipse that today. SPY already at 3.1 million. So closing in on half of its ADV, which is pretty much exactly 7 million out there. So SPY probably will hit that. We'll see. Maybe if it picks up a little bit more in the second half of the session. The S, 1.03 million contracts. The ADV about 2.25. So closing in on halfway for its ADV as well. The small caps, IWM, closing in on 500,000 contracts, 490,000 contracts. The ADV there, 799. So just a tick under 800K out there in the small caps. If you want more small cap data, of course, stay tuned for TWIFO. You live folks will get it in your ear holes immediately after this show. We're not going to mess around today. We are here in the Southern studio. We're going to go wham, bam, thank you, ma'am, right into the next episode here. For all you on-demand folks, you got to wait till it hits the network. Then hit next on your podcast device of choice after you're done listening to this show. and you'll have some fun TWIFO goodness to enjoy. Speaking of goodness, the Q's looking pretty good today. 1.3 million contracts on the tape. The ADV is 2.5 million out there. So the Q's tend to be the movement leader, and they also tend to drive a lot of paper, and doing, again, a lot of that today. Let's go on out here to the single names, see what's lighting it up out here in single name land. And you know what? It's a pretty decent day. 227,000 contracts is what it cost you to break into the top 10 today. You know, we've seen some days recently around $1.50, if not less. So certainly a lot stronger than that today. And number 10 is our old friend / nemesis. It's ChargePoint. Good old ChargePoint popping in there again. If you heard Options Oddities with myself and Saad Hussein from Shift Search, aka Vesica, last week on the network. That's, of course, for all you premium folks out there, all you pro folks. We did pretty much, we only were joking about it, but we ended up doing most of the show about ChargePoint. There was so much paper. There continues to be just unbelievable amounts of paper in this name. 20,000 lots, 30,000 lots, 50,000 lots routinely. Any given day, you can see that kind of stuff going up. That's usually the domain of the ultra elite of the options realm. You're talking your VIXs, your Apples, your Teslas, that sort of thing, your SPYs. Instead, here's little ChargePoint coming along, just putting up paper in just crazy bunches and bunches over there, and doing it again today to the tune of 227,000 contracts. Number 9, our old friend Neo. Pretty much, I'm hard-pressed to think of a day in the last 6 months where Neo has not been in the top 10. Today, it is number 9, 260,000 contracts. Number 8, it's Baba, 261. Is all good again in China? I guess we'll find out. Baba, a leading bellwether for what's going on in that market today, 261,000 contracts. Number 7, former Facebook. Now, I don't think anybody likes Meta. If you like Meta, hit us up. Let us know. I want to hear your thoughts, your rationale for why you like that name. But Meta, number 7, 285,000 contracts. Number 6, the apes are back in action. AMC, 324,000 contracts on the tape out there. Number 5, it's NVIDIA. What is up in NVIDIA today? You know what? Let's find out. Why don't we do that, listeners? A little bit of the old NVDA. There we go, as I hit my microphone. There we go. Southern Studio, still working out the kinks, listeners. NVIDIA up nearly 7 handles, 666 to be precise. The number of the beast today, up to about 158, or about 4.4%. So a nice little lift for NVIDIA. 378,000 contracts coming in at number 5 on our countdown. Number 4, it's AMD. It kind of has that number 4 spot on lock at this point, listeners. A good today for 443,000 contracts. Number 3, the Amazonian, 678,000 contracts. You know, when the Flow Master, Mr. Henry Schwartz, joined us on VolViews last week, he was kind of lamenting the fact that he thought the Amazon 20-for-1 stock split didn't really deliver the volume numbers he was hoping for. And that certainly could be the case. You go 20-for-1, that's a pretty aggressive split. But on the flip side, you can't say Amazon isn't doing more numbers right now. It's number 3 today. That's the lowest we've seen it in quite some time. It has been topping our list quite a bit of late. So certainly doing more volume, perhaps not up to the standards, the high demanding standards of the Flowmaster, but nonetheless, number 3 today, 678,000 contracts. Number 2, the fruit company, Apple, 813,000 contracts on the tape today for Apple. That means number 1 is the old TSLA, aka Tesla, aka the name that just keeps on giving from a volatility and movement perspective. Today, number 1, 887,000 contracts, up 38 handles, or 5.5%. Intriguing. You know, the Musk personal news of late has not been the best, yet the stock has shaken all that off and rallying up here back to about 733 as we're talking about it. Speaking of numbers, Mr. Uncle Mike, we are at that point. We just coming in off the weekend, the holiday weekend here. The numbers just coming in from our friends over there at OCC for June. You know, the question we've been asking on this show, the Advisor's Option, a lot of shows on the network all year pretty much, has been, can this party continue? So far, the answer has been yes. Pretty much every month has been stronger than the last, or certainly stronger than the year before. And yet June looks like one of the first times we're actually trending in the other direction. June total volume, 806 million contracts, down 7.4%. from June of 2021. As you recall, June of 2021 was no slouch. We were firmly into the second leg of the meme stock phenomenon at that point. So everyone and their mother and their grandmother were all buying calls. And so that's a lot of paper. And we remember we were starting to get close to threatening 1 billion contracts a month towards the latter portion of last year. This June, 806 million. So not going to cut it there. Of course, the good highlight here, the silver lining, is that ADV through the end of June is still up. It was 41.2 million contracts. That's up 4.5% from this time last year. So the rest of the year has been pretty robust, and that's translating into a stronger ADV than this time last year. So if we stay on this pace, we should still beat last year's number by around 4%. But we shall see. Crazy things have happened, and crazier things have happened than numbers trending lower. What do you guys think is going to happen for the second half of the year? In fact, hey, spoiler alert, that might indeed be our question of the week this week. We are asking you folks out there right now. The numbers are in from our friends at OCC. And of course, as we just mentioned, June was down 7.4%, but ADV still strong, up 4.5%. Half the year in the books, the question remains, will 2022 total options volume beat last year's record of nearly 10 billion contracts? Heck yes, heck no, or what's ADV? I won't reveal the results yet. This went live right before showtime, so it's more of a question of the last couple of days than it is a question of the week out there. So Mr. Uncle Mike, I'm curious for you, sir. Are you surprised by these June volume numbers? Were you surprised that June was actually one of our first months to be down year over year so far this year? And what are your thoughts on how we're stacking up middle of the year here from a volume perspective, sir?
You know, it's funny. Since 2020, I think like most Americans, I can say nothing surprises me anymore. And so I'd even go so far. I think I read somewhere, and I'm going to steal this quote. Even when I'm surprised, it doesn't surprise me anymore. That's how unsurprised I am with anything that can possibly happen at any time ever. So to get to more on topic, I would say that just having a little bit of a pullback in volume, it's not necessarily a surprising thing just because it's been so high. But can the party continue? Can we keep going up? Yeah, I think we can. Because to quote Andrew, if options love a bull markets could be coming. We could have more volume coming. So that's kind of what I'm looking at.
Since we're talking about overall interest in options, it's that time, Uncle Mike. It is time to do our mid-year checkup on some Google Trends data. We like to do it at the beginning of the year, and we like to do it in the middle of the year to see how things are trending. And so we are just coming off the heels of the end of June. So, of course, a good time to check in, see how the overall markets are trending. Let's start with a pretty general search term. Let's just go for options. That term, as you might imagine, has remained pretty steady throughout most of the year. Obviously, a lot of things can bleed into that search term, so it's hard to read too much into this one. This one has peaked. If you know Google Trends data, they track it by peak interest being 100 and everything else being some percentage of that on the graph. This one has hit that 100 level multiple times over the course of the past year. Currently is trending a little bit lower. It was at about a 63. So we're seeing overall options interest at about 2/3 of where it was at the peak, which has come multiple times over the year. In October of last year, it's like in February, hit it again in March. So it's hit 100 multiple times, which is a bit of a rarity. Usually these graphs have one peak date and then everything else kind of is somewhere lower, but not so much the case for options. Let's drill a little bit further into our wheelhouse. Let's go to options trading. And this one peaked back in the week of October 24th to 30th last year. So that's, of course, not that far away from the overall high for the equity market as well last year. Of course, we were starting to get into that leg of the Omicron variant, and there was a lot of concern out there at that time. I think the big spike for that came, I think, a week or so later. It was around the Black Friday, Thanksgiving week, maybe a couple of weeks later there, where that's where we started to see a lot of concern about all that Omicron variant. But for our purposes here, the peak interest in options trading was last October 24th to 30th. Right now, we are hanging out around that 2/3 level, a little bit below that, actually at a 61. So roughly 2/3 of the interest in options trading right now that there was back in October of last year. And that kind of jives with some of those numbers we were seeing coming out of OCC as well. Let's drill a little bit further down, see what we can find. Let's go to call options. And call options, they peaked around that same time I was just talking about, a little bit later, though, October 31st to November 6th for this one. So exactly 1 week later for the peak interest in call options. And then this one, as you might assume, given the fact that the meme stock frenzy is mostly in the rearview mirror. I mean, AMC may have something to say about that, but outside of that, mostly in the rearview mirror, we're seeing call options interest now at a 43, so less than half of what it was at the height back in October 31st to November 6th. That's how they do it. They do it by weeks in Google Trends, listeners. So intriguing stuff there as well. That also kind of jives with the numbers we're seeing coming out of OCC. Let's throw a weird one in there just for fun. Let's go to options education. I can't imagine it's the most active search term, but there is enough data to pull some trends out of it. This one peaked a few weeks after the other two. This one peaked November 14th to 20th. So we were getting right into the thick of that Omicron concern out there. And then this one has fallen off a cliff as well. Even though it has bounced, it looks like it hit around the 25 level back in mid-June. It has bounced from there. So I guess if you want to look at a glass half full, it is now at a 39. So it has rebounded from its nadir for the year, but it is still roughly 40% of the interest that we saw back in that November timeframe. Let's do a couple others here really quickly. Let's go out to volatility, just that broad volatility search term. That one peaked beginning of this year, actually about almost a month in, January 23rd to 29th. So that's, of course, when we were starting to get a lot of concern about the troop buildup over there in Ukraine. Still a month away from the actual invasion, but a lot of consternation and hand-wringing over that. And that's, of course, where we saw VIX hit the low 30s, at least the first time we broke into the 30s there. So that, of course, was the trend. Remember, in that early time frame of the year, listeners, we went from about a 16 handle in VIX to kick off the year all the way up to the low 30s pretty quick. So volatility interest, understandably peaking then. Right now, it's about a 60. So 60% of the interest it was back in late January there. So intriguing stuff. Let's throw VIX into the mix as well. Why not? Even though this search term has gotten a little clouded over the past year because, of course, they launched that massive Spanish language, effectively Netflix, called VIX at the same time. So that's going to gum up the works here a little. This used to be a pretty pure options and volatility play. These days, not so much. The interest in VIX peaked that same week, Jan 23rd to 29th, which again coincides with that early peak for VIX. And then it has trended lower. We have seen a few times where it flirted with getting back close to that 100 level, looks like into April and again in mid-June. So that also coincides with some higher levels we saw in VIX. That also coincides with the launch period for that VIX platform. So probably a little bit gumming up the works on the data in the last couple of months. Right now it's at a 42, so less than half of the search interest in VIX than there was back just in January. Mr. Uncle Mike, again, kind of more data we're throwing at you. You say nothing surprises you anymore. What are your thoughts on some of these search terms? Most of them seem to be trending a little bit lower, which seems to coincide with the numbers we're getting out of OCC, sir.
Well, it would make sense. I mean, with the trend happening the way with which it is, it does, nothing lasts forever. And so nothing continues to go straight up forever. Nothing goes straight down forever. So when you get a little change in trend and something along those lines happens and it's in line with what the OCC numbers are, I think that definitely makes sense from where it is. And maybe did we track to see how much of it came from Maine, the option trading capital of the Northeast?
No, we did not. That's one data point we did not have a chance to pull today, which is where is this data coming from? So we'll have to do that again and run those numbers as well, because you're right. Oh, the rock lobster has been on hiatus last couple of weeks, though, so I have to imagine Maine has plummeted in just the last couple of weeks. We'll see if we get him back on, then we'll see those numbers trending north. Speaking of numbers really quickly here, not a lot going on the earnings front. Obviously, markets were closed on Monday. Not a lot of big names popping off on the July 4th week. With the exception today, we have Levi's after the bell, WD-40, and one of our favorites. We've joked about this one before. It's such a ridiculous ticker. This is Helen of Troy Brands. They actually own Braun and Honeywell, and Pure, the water filters as well. So they own some brands you may be familiar with, even if you've never heard of Helen of Troy in your life. I recall we had never heard of that name before either when we first encountered this ticker. The ticker is HELE, HELE, and they had earnings before the bell today. They went into their announcement 169.89. They were pricing in 6.8%. They delivered a lot more than that to the dark side. They delivered 9.1%. They were trending at right around 154.5 as of this report, which came out right before showtime today. It looks like they have rebounded a little bit since then. They're up to about 156 and change now. So they're closing in on their straddle, but still outperforming it to the dark side. So if you were intrigued, if you're one of those hot Helen of Troy traders, then there you go. We got the numbers for you. We do have some more names popping off after the bell. Then we kick it all off again, listeners. We get back in to JP Morgan and Morgan Stanley and next week, and then we're back in it from an earnings perspective. So if you're waiting for hot and heavy earnings season action, you don't have to wait too much longer. Let's look really quickly here. Speaking of action on the earnings trades front, and we are still monitoring for your trading education and information. 93 long straddles, 43 short straddles, and 95 long calendars. No exits or entries today. So keeping an eye on all of those for you. You can check them out for yourselves, theoptionsinsider.com. Meanwhile, it is time for us to head on into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's go unleash the Eye of Sauron, see what it fixes its gaze on today. First off, we're going back to a frequent offender now. We're going back to FSKKR Capital Corp, easy for me to say. Ticker symbol Fisk, FSK. No, it's not Wilson Fisk from the comic books, a.k.a. the Kingpin, even though that would be cool. But indeed, it is FSK. As you recall on the show last week, we talked about someone coming in and gobbling up nearly 10,000, 9,700 of the AUG 17 half puts, paying 43 cents for these. That was a 42 vol. The stock was $19.36 when these puts went up. Well, we're coming back today because someone else is coming back to play. Maybe the same person coming back to play for size in Fisk. A really quick recap here. Fisk today trading $20.50. And it has trended here. On the year, the high was $23.44. Looks like that came. It looks like they floated that level a couple of times in September, and then again in the March to April timeframe. And then the low was $18.08. That came, looks like just a couple of weeks ago out here, late June, for good old FSK. So the concern to the downside was merited. They did get to the 18 handle. This time we have someone coming back, and once again, Mr. Uncle Mike. They are playing to the dark side here in FSK. Someone gobbling up. Well, actually, this market is so atrocious. We got no bid at $1.30 for this market. So good times to be found here. Someone trading 11,300 of the AUG 20 puts for 70 cents. So did they find a 70 cents bid? In which case the real market was maybe 70 at a little bit below 130, or are we talking that 130 offer was nonsense and they actually were able to pick these up for 70 cents? Either way, they are trading these through expiration because earnings are, they're trading these through earnings because earnings are on the 8th after the bell. So, Mr. Uncle Mike, we had last week someone gobbling up nearly 10,000 of the AUG 17 half puts. This week, we have the AUG 20 puts going up kind of in the middle of that atrocious market for 70 cents. What are your thoughts on all this crazy put activity in FSK, and what do you think they were up to today?
Well, it reminds me of a sign that our Chicago White Sox fans will know regarding Carlton Fisk, the great catcher who was for the White Sox and the Red Sox for many years. pitch to Fisk at your own risk. So I will say on here, trade Fisk at your own risk when you have a no bid by $1.30 spread on the bid-ask spread. So I think someone has either a lot of hedging or a lot of speculative nature that they're trying to activate with this trade. That's what it sounds like to me.
Are you a White Sox fan, sir?
I am not, but my father was, and so just to spite him, I claim that I'm a Chicago Cubs and White Sox fan just to bother my dad. It really bothers him a lot. It's quite funny.
Yeah, my wife and son are both White Sox fans. They keep trying to lure me over to the dark side. I've been to a number of games. The team not exactly blown the doors off this year, but they'll be excited to hear that the White Sox were mentioned on the show today. So there you go. You've earned some points with them, Uncle Mike. Let's keep on rolling here. Let's go out to another name we haven't talked about in a little bit. This is Constellium SE, ticker symbol CSTM, trading right now $13.31, up about a whopping 28 cents, or about a little over 2% on the day. This is the name that's had quite a journey as well. They got up, looks like in the September timeframe, to $21.60. That was their high for the year. And then they kind of hung out there for most of the year until June. Then they started trending into the teens again in June. And then they sold off hard on June, looks like 23rd, actually. They hit their low for the year of $11.79. So they are fighting their way back from that, but they still have a long way to go at $13.30 right now. Let's see what our Eye of Sauron found. Looks like someone, Uncle Mike, is maybe thinking they're not going to climb that bridge, because someone came in this morning and just blasted away at the July 14 calls. The market was 20 cents at 30, so this is a little bit better than our Fisk market, no bid at $1.30. Someone traded 18,683 of the July 14 calls for 22 cents. The stock was $13.44 when these went up, so a little bit higher. Worth noting, there are earnings, but they are outside the July expiration cycle. They are on July 27th. Mr. Uncle Mike, it seems like somebody is fading a little bit of a pop for Constellium between now and July expiration, but not going far enough to write the call through earnings. They don't want to mess with that noise. What are your thoughts on this one, Mr. Uncle Mike?
Well, I think if you're going to write it pre-earnings, then it's a lot of times that can be beneficial in that your obligation has been met before the earnings actually happen. So this person does not want to mess with earnings at this stage. They're pre-earnings, and I think that was done on purpose.
No messing with earnings, getting a little bit of the old risk premium, making a little bit of income on a stock that has been beaten up. I can't really fault them, especially if you think that the stock's not going anywhere anytime soon and you can't really dump it, or you don't want to dump it yet. Getting a little bit of the old income back. I won't fault them for getting their 22 cents 18,683 times. It's a decent chunk of change at the end of the day. Let's go out to one more name. This is a frequent offender here in the Odd Block listeners. This is Ares Capital, ticker symbol ARCC. We have talked about them quite a few times in the past. Most recently, we went out to a lot of just put action in this name. We talked about them on April 7th on the show. Someone gobbled up 15,000 of the May 20 puts for 35 cents. The stock at the time was 21.07. So someone was pretty concerned. This was a fairly near-term trade. You had a month and change on these. They were concerned about some downside, and they were putting their money where their mouth is. This one worked out. The stock closed at 18.09 on expiration, so they had a reason to be concerned. The stock trended down about $3. But looks like they bailed on these puts a little bit early. If they had held on to these, they would have been all right. But they bailed on them on April 25th, so a couple weeks after the trade went up. We saw them dumping these for 20 cents, 15,000 times again, so the exact same number. The stock had rallied by that point right back to pretty much a little bit north of actually where they put the trade on. So the stock was 21.34. So it seemed like they got the heck out of Dodge, decided to keep what was left of their trade, which was 20 cents. So they dropped 15 cents, 15,000 times, so around $225,000 on that trade. So that's not great. And then they came back in. They obviously had less capital to work with, and they came back in and they bought 10,000 of the June 20 puts instead. So they kept the trade alive. They kept the party alive. They bought those for 45 cents. So they effectively did that roll on a bit of a ratio. and they did it for 25 cents there. And looks like Mr. Uncle Mike, the second leg of that trade actually worked out because the stock closed at $17.42 on June expiration, and these puts were all still open. So these puts went out at $2.58. So they made a $2.1 million on the second leg of that trade. And obviously, if they had stock, they're going to be letting it go there. So that could be an intriguing part of that discussion as well. But just from the purely options perspective, they made up the $225,000 and then some that they lost by keeping that trade alive. And it seems like, Mr. Uncle Mike, the reason why I bring this up is because we're going back to Ares Capital yet again today. The same number, so it's probably the same person, 15,000 of the AUG 18 puts this time, Mr. Uncle Mike, going up for 44 cents, pretty much lifting the offer. That's a 33 vol if you are intrigued, listeners. The stock was $18.93. And they are getting some earnings in this one. The next earnings are on July 26th. So, Mr. Uncle Mike, we've got somebody who's been going to the well multiple times for some downside puts in Ares Capital. Didn't work out the first time. Worked out pretty well the second time. And it seems like they still have some stock, or they still are concerned about this name because they're loading up yet again back to the trough for 15,000 more of the AUG 18 puts. What say you, sir?
Well, what's $225,000 amongst friends? What's the big deal?
A pittance.
It's nothing. So when you're going for 10-to-1 ratios on your trading, that's really not that big of a deal. Now, with this is obviously someone who's very wealthy or has a lot of institutional money to hedge, one of the two things, or they're just, like I said, speculative and they're very wealthy. And so what they're looking to do is they're buying out of the money options. And so with out of the money options, the way with which you have to trade them is that you need very 5-to-1, 10-to-1 returns in order to make it work. Now, the disadvantage, of course, is that the odds are against you. And there's an old expression: whenever you trade out of the money, whenever you're buying out of the money options, you're going to end up out of money. But what you have to consider with this is that when you do that, if you're getting a 10-to-1 rate of return, then you only have to be right 1 or 2 times out of 10 to make this actually work really well for you. And so that's the concept of what this person is doing, in that they're rolling in such a way to where they're keeping things alive, and that, okay, I lost on this one, but I know that the next one, if I just get 1 out of these 10 right, it'll work out for me. And they're either doing this as a style of hedging, or they're doing this as a style with which they're trying to just speculate, one of the two. But just have an understanding that if you do that, you got to have another investment, and that is Pepto-Bismol, because you got to have a strong stomach to do this type of option trading. And so when doing so, you have to be prepared to lose most of the time, which this person apparently is, the way with which they're doing it. And the one time that you win makes up for 9 times that you lose, you hope. And that's the style with which this person is using for this trade.
All right, Mr. Uncle Mike. Now, everyone enjoys a good holiday weekend, but the dark side of the holiday weekend is that it deprives us of our Monday edition of the Strategy Block. But never fear, listeners, we are back for your listening pleasure. It's Thursday. We're going to do it anyway. A little bit of the old Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Mr. Uncle Mike, sir, you may regale us with wit or wisdom or whatever floats your boat, sir, out there today. What is lighting up your tape? What do you want to share with us in this week's belated Strategy Block, sir?
Well, let's talk about vertical put spreads. And I want to talk about them because of the fact that, let's say you're bearish on this market and you don't like the fact that volatility is still in the mid-20s right now, or at least with the VIX, and you just can't buy a put because it's too darn expensive. And you're bearish. Or let's say that the stocks have come up a little bit for you, that maybe you did buy the dip of dips so far for this year. You got in the 3600s with the SPX in some way, shape, or form, and you want to protect yourself. And the puts are just still too expensive for you. Well, let's talk about buying a put spread. Whenever you're buying a vertical put spread, you're buying a put option, but you're simultaneously selling a put option below it for the same expiration. So let's say XYZ stock is at 50 and you want to buy the 45 put, but it's just too darn expensive for you. Well, what you can do is you can buy the 45-40 put spread, meaning you're buying the 45 and you're selling the 40 as a way with which you can reduce the cost. So why would you buy a put spread over just buying a put? Well, there's a few reasons, but they all come down to this one word, and that is cost. If there is zero money in the example that I gave, let's say that the 40 put is trading at 0 by 0. I know that never happens, but let's just say in theory that it would. You'd be foolish to sell the 40. You'd be better off just buying the 45 because of the fact that you get absolutely zero benefit out of selling an option for zero. Now, every put spread that I've ever traded, or what most people have ever traded, there's usually some significant money in the 40 put to where it would mitigate the cost of the 45 put. So the advantage is, let's say that volatility goes lower. Well, that hurts the 45 put that you bought, but you benefit a little bit from the 40 put that you sold typically. Time decay is a risk and it hurts the 45 put, but you get a little bit of a benefit from the 40 put. And so that's why you're actually doing a put spread instead of just buying a put option. That's why you would think about such things. Now, the disadvantage, the fact that you're only covered to the downside to 40. So if the stock were to go to 0, you're only going to benefit to the downside to 40. The other disadvantage of it is that you won't make your money as quickly. So if the stock were to go down and it's at the 42, 41 level, you'd make a decent amount of money at the 45 put, but a lot of times the 40 put would hurt you to where it wouldn't be as beneficial to you. So there's advantages and disadvantages of every trade with which you make. However, the problem is that there's a cost involved. And so understand that if the cost is too great for you, that you may want to consider a put spread. Now, when looking at it, let's say you're looking to hedge yourself. If you own the stock, if you like the stock at 50 and you'd love it at 40, then you'd want to buy more of it, then a put spread is something to consider. If it costs too much, a put spread is something to consider. If you want disaster protection to where if the stock were to go from 45 to 10, then just buying a put is the way with which to go, no matter how expensive it is if you're that bearish on it. So with the put spread, I think it's something that's a valuable tool to have as a hedging mechanism or just being a bearish trader in some way, shape, or form. And if you'd like more information on the put spread, check out my YouTube channel. I just happened to put up a video about put spreads yesterday. Just type in St. Charles Wealth Management in the YouTube, and it'll take you to my channel.
Funny how that works. Look at you coordinating your media, sir. It's like you've learned all these years doing the shows. You've learned how to put that content up. Check them out on the old YouTubes if you haven't already, listeners. A lot of great content over there. Meanwhile, it's time for us to do our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of this week. Before we do that, really quickly, let me pay off our early, or I really should say late question of the week. It only went live right before showtime here. We were a little busy traveling this week, listeners here. But like I said at the top of the show, the numbers are in from our friends at Options Clearing, aka OCC. A June volume down 7.4% from last year, but ADV is still up 4.5%. Half the year's in the books, and the question remains, will 2022 total options volume beat last year's record of nearly 10 billion contracts? Gave you three choices: heck yes, heck no, or what's ADV? Mr. Uncle Mike, sir, I'm curious for you, what is your vote, and then what do you think our folks are voting for?
Heck yes and heck yes. That's what I think it's going to happen.
I like it. I like the optimism, sir. It is dripping with enthusiasm and optimism there from Uncle Mike, as we would expect. We'd expect nothing less from the Uncle-list of Mikes. Unfortunately, our audience, at least in the early polling, Uncle Mike is going exactly 2/3 for heck no, and 1/3 exactly for heck yes. No love for what's ADV. That actually makes me happy. When we added that, I was like, oh, hopefully no one answers, but maybe there'll be some jokesters who pick that one. But again, that just went live right before showtime. At Options is the place to go to make your voice heard. Of course, if you join us in the live chat. We always bump you folks up as well. Just like our buddy here. Who do we have in the live chat? My producers can get that to me. There we go. We have Unlimited saying, this is what we were talking about before about Meta versus Facebook. Which name do you prefer? I said, if you like Meta, hit us up. He says, I actually think Meta is the way to go. Facebook is a dead company. People use Instagram more than Facebook, and the only way this company makes it in the future is through their VR, AR headsets. And in the year 2030, the word Meta will probably be used as much as we use the word internet. Well, they certainly are embracing that trend. A lot of other companies are jumping on it to get into the quote-unquote metaverse. I think you might be right there. I mean, the main Facebook platform has a lot of traction, but folks use a lot of other components of it. I like WhatsApp. That's what I use more. I think other people in our chat saying they like WhatsApp as well. I don't really use Facebook at all. We use it for the business, obviously, but outside of that, I don't use it personally much at all. Maybe that's a failing on my part, but I prefer Twitter and some of the other more, I think, immediate platforms out there. Speaking of Twitter, we also had a poll last week for you folks. We asked you, which asset class do you feel has the best chance to turn positive by the end of the year? We gave you 4 choices: equities, rates, crypto, or other. Only 3.2% of you chose other. So that's kind of interesting. I thought you'd write in with all sorts of esoteric asset classes. But in this case, 45.2% of you said equities. Equities are the thing that might have the best chance of turning positive by the end of the year. Well, they're off to a good start today. Rates, 35.5%. Only 16.1% of you for crypto. So Uncle Mike, they are firmly in the Bitcoin sucks camp. But what do you think about this notion that equities could turn positive by the end of the year? So that's a pretty steep hill to climb. You think they can hit it?
No doubt. They did it in 2000. Why not now? Just because we've had a little bit of a pullback over the course of the last couple months doesn't mean we can't come back with it. So why not?
Why not, indeed? And since we are in the Around the Block segment, Mr. Uncle Mike, what are you keeping an eye on in the markets until we gather here together on the show on Monday?
Well, I think that what we need to watch of course, we have the unemployment number coming out tomorrow. I think that can be it can be a big market mover. And the reason is that we have the Fed. And so with the Fed raising rates or going to 75 bips the next time or 50 bips, I think the unemployment numbers tomorrow are going to be really big or have a big influence on the market one way or another. And I'll give my 50% guarantee that it could go up or it could go down, as I always do.
All right. Thank you for that 50% guarantee. That's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But never fear, listeners, if you're one of our live listeners, just hang out for a second. We'll be back pretty much immediately after the Option Block to give you your live dose of TWIFO. So you don't have to wait a half an hour this time. It's right in your ear holes immediately. That's how we do things here in the Southern studio. And then, of course, back again tomorrow for Volatility Views and for all you cool cats in the Secret Club Options Oddities after that. But before we go, Mr. Uncle Mike, sir, if folks want to check out your vast array of coordinated multimedia content, where should they go? What should they do?
Oh, they can go to all sorts of places. First off, if you're looking for a financial advisor who likes the option product and uses it when it's appropriate for his clients, of course, check out my website, stcharleswealth.com. If you want to see some of my YouTube videos that I've been putting out, I believe we're up to around 25 of them right now. Go to my YouTube channel, just type in St. Charles Wealth Management, and more so than anything, I try to put out as much content as I can through blogs and YouTubes. Feel free to follow me on Twitter. I'd love to have you. I need some more Twitter followers. So I can do, the more Twitter followers I have, the more motivated I am to tweet.
There you go. Give him a follow.
At Mike TOSAW.
There you go. At Mike TOSAW. Give him a follow over there if you are so inclined. Since we're nice, they couldn't join us today. We'll also give some love to the Pit Boys. At Option Pit is the place to go to check out all of their many and varied products. I think next week the Rock Lobster will return from his multi-week hiatus. I don't think he went anywhere. I think he just hung out on the shores of Maine. I think he had a lot of battling to do with the Clam Pirates. We have a little bit of equipment battling to do at the end of this show, listeners. We'll be right back, though, in a few minutes for all you live folks with TWIFO. Everybody else, wait till it hits the network, then hit next on your device of choice. Should be hanging out there. Then we'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. After that, for Options Oddities. And, of course, for all of you out there, stay safe out there, and we'll see you back on Monday, another episode of The Option.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.